Probably my best subject at school was maths. I took particular interest in probability and maths in general. The one bit of interest my father took in schoolwork was around that time, and he taught me how to settle bets. And this would have been when I was perhaps 12 or 13 and perhaps should not have known how to settle bets. And I was never going to be extradited from the UK for being a bookmaker. For extradition, the offence has to be the same in both countries. But I certainly would have been extradited for being a money launderer. And that's why it was such clever legislation.
In this episode, I'm joined by Progressive's legendary technology analyst, George O'Connor, for a conversation with Mark Blandford, the online betting pioneer and founder of Sporting Bet. Always interested in horses, horse racing and betting on horses, Mark moved from traditional bookmaking into the emerging world of the internet in the late 1990s, building Sporting Bet into a high-growth AIM-listed company, later acquiring US-facing Paradise Poker. But things changed suddenly in the US online gambling market in 2006, and Mark eventually left Sporting Bet to focus on his racehorses at his family office. In 2002, Mark was named AIM Entrepreneur of the Year, and in 2015, his horse, Next Sensation, won Cheltenham. Mark has also had several winners as a venture capital investor and has several strategic public company investments. His portfolio is wide-ranging and includes interests in Nasdaq-listed Gambling.com and UK-listed small caps, Gaming Realms, B90 and Good Life Plus. Among his private investments, Mark owns stakes in platform companies, payment companies, agtech and edtech businesses. He discusses his interest in quantitative analysis, improving operating efficiencies, and working with entrepreneurs who are prepared to listen and take advice. This is a fascinating conversation with lots of lessons and reminders of how technology can change industries and how a changing regulatory environment can create radical uncertainty and existential risk. Mark talks openly about his eventful journey from a traditional bricks-and-mortar bookmaker to a seasoned VC and investor. I must remind you that none of what you're about to hear is investment advice, but solely for information and entertainment only. Please take professional advice before investing any of your money in these crazy markets. Please enjoy our conversation with the Maverick, Mark Blandford.
Brought to you by Progressive Equity.
Mark, welcome to the podcast and thank you for joining us today. Can we just start with you telling us a bit about your background and your journey into the betting industry?
I grew up in a farming family in Herefordshire, and as was the case in those days, several farming families were connected to the horse racing world, national hunt racing in particular. So I'm talking about people like Terry Biddlecombe, Michael Scudamore, to name but a couple. And in fact, my parents used to go racing regularly. I began to go racing. I knew people in their circle of friends, which included Michael Scudamore. And I suppose I became interested to a degree in horse racing, but I also became fascinated by the bookmakers. In particular, it struck me that with all my parents' connections and all of the inside information, every time we went racing, the bookmakers were still there. So that's what first got my interest in bookmaking.
And they all drove flashy cars, I would imagine, as well, didn't they?
And wore large check suits as well.
Yes. But it was an interesting introduction to the world of asymmetric risk and making decisions under uncertainty, which does seem to be a bit of a feature of your career.
Yes, I think that's a fair assessment. I think as well, I'd describe myself as being entrepreneurial. So in terms of seeing what was going on, my mindset was always to think, how could this be improved? How could it be made better? How could it be made more efficient, etc.?
You got into the betting industry by literally buying a betting shop, I believe. Is that right?
The situation was I'd had a couple of jobs after college. It literally felt like waiting for dead men's shoes. And having mentioned that I was entrepreneurial, I sort of got to the ripe old age of 27 and sort of thought it's now or never. Mrs. Blandford was starting to make noises about starting a family. And I was at home one day, and as was always the case, the kitchen table had got a copy of the Sporting Life on it, and there was an advertisement for a betting shop in a southwest Midlands town. So I replied as much out of curiosity as anything, and it turned out that it was a betting shop that my father knew. It was only about 3 or 4 miles away from where he'd grown up. So long story short, I ended up buying a betting shop in Malvern Link. Interestingly, that all concluded and I got my bookmaker's permit on the 4th of July 1984, which I describe as my Independence Day.
Talk us through the pre-internet days of the betting industry and your moment or pivot into the online world and the formation of Sporting Bet.
The industry those days was largely dominated by betting shops, so pure retail betting. But there were also a number of companies offering telephone betting facilities. Certainly all the big operators had such offerings. And that really was the vast majority of it, other than the boards bookmakers and rails bookmakers that we would see on course. I was quite happy in that environment. I built a small chain of shops, which I sold to a company called Arthur Prince, owned by one Michael Tabor. They in turn were sold on to Corals. And I was quite happily doing the same thing again, this time with my own standalone telephone betting operation, as well as the shops. And I discovered the internet at the end of 96. That really was a light bulb moment for me.
And I think, George, that's probably about the sort of time you discovered the internet, wasn't it?
Excitingly, I was doing some stuff for Sun Microsystems, so it actually came to me a little bit earlier. What at the time made you make that leap? And what were the immediate challenges that you discovered then?
So we had to scope the work and develop our own technology. And that's what we did during 97. We began that. I was effectively taking a sabbatical out of my own betting shop business to do it, formulating the business model. And by 98, we were building the technology. We got our license in Alderney in the Channel Islands, and I sold my chain of betting shops second time around to the tote. The challenges were enormous because there was nobody who had interactive software development knowledge who knew anything about the gambling industry, at least not that I could find. So it was hard work, to be frank. And I think like a lot of those tech projects back in the early days of the internet, it came in over budget and overdue. But we were trading in October 98. And that was, to put that in perspective, about 3 years before people like Ladbrokes.
How difficult was it in terms of identifying the correct route to market? But also, how was it in terms of pulling customers in terms of customer acquisition? How difficult was it then? Or was it really about the sort of the pull of the new?
I think there was the pull of the new. My business training was, in fact, specializing in marketing and in particular international marketing. So my light bulb moment was that I realized my betting shop customers, 85-90% of them lived within a mile of a betting shop or drove past every day. I realized that I'd be able to market to anybody in the world. But because of the pull of the new, we used PR a lot in the early days. We had a competitive advantage. We'd got a license down in Alderney in the British Channel Islands. So we were competitive. We also were marketing in the early days with banner adverts on certain sports content sites. We hadn't really discovered the affiliate industry. In fact, I think that was in its infancy. But altogether, and some email marketing where we could get access to databases, that's how we began. And then things quickly began to grow by word of mouth. I have to say, helped by that competitive advantage of tax-free betting when the UK was charging 9%. So that's how it was in the early days, sort of 98, 99 into 2000, when the digital marketing channels began to get more developed.
We had the dot-com boom and the dot-com bust. But the amazing thing about your business, and when our paths crossed a few years later, when Sporting Bet was trading on AIM, and was that you had an amazingly profitable business. You weren't just attracting eyeballs or generating revenue, you were generating profit and cash, which was a key distinguisher. So those sort of early days through the dot-com boom and bust, how was that for you, Mark?
Well, the dot-com boom was very helpful. We listed on the sadly departed OFX in late 98. That gave us access to capital at a time when people were looking to invest in internet businesses. So that was very helpful. And just on that, we moved to AIM January 2001, where we raised a further £17 million. And I think we must have been about one of the last dot-com listings to get away before the inevitable crash. And I say inevitable because we had focused on building a profit and loss account, which had got a positive bottom line, because we had such efficiencies in our business model. And we were in an industry which did monetize internet traffic very well. So we were in the right place at the right time. I wasn't interested in hits and eyeballs and all those other metrics that people used to talk about. Coming back to a very down-to-earth farmer's son background, you pay the bills with cash. So we had a P&L account that produced cash.
And then, of course, you discovered the world of online poker and made the acquisition of Paradise Poker, which became an all-encompassing thing at the time, as I recall.
I think there'd been a step just before that, which we were one of the first to integrate online casino as well. So we already were widening our product portfolio, and we'd seen the impact of that in terms of increasing player values. Poker, it struck me, unlike casino, had a double benefit. It was relatively straightforward to convert betting customers to casino. We were getting sort of nearly 40% playing in the casino to some degree or another. It didn't work so well the other way. But with poker, there was a natural cross-sell, both from sport into poker and poker back into casino. And knowing both industries to some degree, when the opportunity to buy Paradise came along, again, really, it was another light bulb moment. This wasn't 2 and 2 making 4. This was 2 and 2 making 7, really. And the market quickly realized that. Our share price increased significantly off the back of that deal. In fact, I think it doubled. And it worked. We had the cash flow to prove it, and ended up winning an AIM award for that deal, which was very pleasing.
You're a winner at Cheltenham. You're also AIM Entrepreneur of the Year. One of these is a lifetime experience and one is a grand day out. Which is which?
Oh, what a great question. I suppose in my mind, I can compartmentalize. I don't think I can ever be prouder than being AIM Entrepreneur of the Year. I've won other industry awards, which, when they're given by your peers, etc., is also extremely satisfactory and, humbling. But if you're into horse racing, well, I'll tell you the mini story is it would always been our ambition to have a runner at the festival. And by that, I don't mean some 500 to 1 outsider that we'd put in to get in the way of the good horses, but something that was qualified on merit. And the horse neck sensation that won for us subsequently in 2015, he'd had a great chance in the year before, but unfortunately he was a headstrong horse and he'd bolted. So he'd led the field, ridden by Richard Johnson, I think some 20-something lengths clear in a 2-mile chase. He jumped the last on the famous Cheltenham hill in front, but he did get caught on the famous hill going to the winning line and ended up finishing 4th. That felt as though we'd missed our opportunity, but the year before he behaved perfectly, and ridden by Tom Scudamore and trained by his brother, young Michael, or Mickey Joe as he's known. That was a huge occasion because we had the 2 brothers who'd trained and ridden the winner, and their father, Peter, who I know very well, was also there. So that was a very emotional occasion, and I'm not sure I can compare the 2 directly.
By being asked who your favourite offspring is, really, isn't it? Very unfair question.
Exactly. They're both fantastic in different ways.
That said, Mark, to put you in an awkward position, thinking about the equine industry and your love of that, and then to sort of take your career up to date in terms of being a VC, I mean, arguably there, one is a hobby and one is an investment. but here I'm struggling. Which is which?
Which is
again?
which?
So along our VC journey, we invested in a company called Interactive Investor, and that was a share trading platform direct to consumer. If I said to you, our customers read the form, they make up their own mind, and they put their money down, you don't know whether I'm talking about online share trading or I'm talking about betting. So
Yes.
I think there are these similarities, and I think my mindset is that I do tend to be analytical. I like things that work in an analytical environment and where it's possible to either optimize or find greater efficiencies in businesses. The gambling industry was ideal for me, but that same skill set coming across into venture capital investing, I'm always trying to look at it in the way a professional gambler would, in terms of assessing the risk, pricing the risk, and deciding if it's a horse I think that can win the race or a company that I think is going to be successful. And if there's value on offer, being part of it.
So where did you get that analytical approach from, Mark?
Probably my best subject at school was maths. I took particular interest in probability and maths in general. The one bit of interest my father took in schoolwork was around that time, and he taught me how to settle bets. And this would have been when I was perhaps 12 or 13 and perhaps should not have known how to settle bets. It's developed over the years, but I think there was always something there to work with.
Just taking you back to the sporting bet story where we left off, the story took a turn for the worse very significantly in around 2006, as I recall, with some unexpected legislation coming from the States. And just wanted to take you back to that period and just ask your opinion of what it was like to go through and what you learned from it, because as I recall, it was pretty hairy. And that's just as an outside investor in sporting bet.
Yes. I've had this conversation with many people over the years, a number of whom were investors. Look, the lesson for me was don't put too many eggs in one basket. We were large operators in the American market. It was highly lucrative. The year before, we'd made net operating profits of £106 million, and something like nearly 70% of that was a contribution from the US market. We had what at that point was a legal structure where we were licensed and physically operated live gaming service from Antigua, who were a member of CONCAF. And CONCAF had signed a trade agreement with the US for a number of leisure goods. It specifically included the word gambling. So it was something of a loophole. That trade agreement predated the internet. The Americans had already had a couple of thoughts as to how they could try and stop the offshore supply into their then largely prohibitive approach to gambling. Sports betting in particular considered worse than casino. The piece of legislation you're referring to is UAGA, passed as a bill 13th of October 2006, a date I'm not likely to forget. It was a roll-up bill. It was the end of Congress. Everybody had gone home to start electioneering. And we'd done a lot of lobbying in the US, but I think there were 6 people in the House when that bill had passed. None of them were our people we'd been lobbying who'd been working with us. We'd been lobbying in favor of regulation and taxation and ran what we thought was a reasonably successful campaign entitled, Please, Sir, Can I Pay Tax? But the mood at the time was prohibitive, and it was clever legislation because they did not define illegal internet gambling, but they made the process of transferring money for the purposes of internet gambling into money laundering. And I was never going to be extradited from the UK for being a bookmaker. For extradition, the offence has to be the same in both countries, but I certainly would have been extradited for being a money launderer. And that's why it was such clever legislation.
But of course, all things seem to have changed now, and the force of gravity in the betting industry seems to be leading us back to the US, and all the big online betting businesses seem to be seeking to list in the States and develop their businesses in the States again. How do you see that industry now in terms of the risks and opportunities compared with your experience in 2006?
To many, it will look as though the wheels turned the full circle. But what actually happened in reality was that the US had put the industry into the wrong hands. So rather than having regulated public companies as suppliers, they ended up with illegal onshore supply and unregulated offshore supply. So no safety nets, no controls, just people who were prepared to ignore the law and to carry on. And it was highly lucrative for them to do so. I think where we are now, it's probably a sign that in terms of the US government, they realized, A, that they couldn't stop the industry, B, the industry is better with safety nets in place for the vulnerable. And as ever with gambling, the benefit to the wider population and governments are the tax revenues. And I think hard-pressed states began looking at additional sources of tax revenue. And the sin industries are great ones to introduce because it doesn't involve everybody having an income tax rise.
America seems to be a recurring theme in your CV. Is America worth the graft? Today, we've got a number of UK companies thinking about where do I list. You've got holdings and board positions in companies both in the UK and America. So, from the coalface, what is your view on the relative merits of either market?
The American market is more liquid and, as a huge generalization, but is often trades at higher valuations. London struggles, and I'm afraid we're having this conversation only, 14 days away from the finance bill, the so-called autumn budget. There are rumours that the new government will remove the inheritance tax relief from AIM shares. I think such a move, quite frankly, would be disastrous. So it's understandable why companies, when you have a government who would think like that, when you don't have the liquidity, when you have lower valuations. So it's a number of factors. I'm not just solely blaming the government here. Why people look to other exchanges. And the US is highly attractive. And you're probably referring to the fact that I'm an investor in the gambling.com group. I've just very recently come off the board. I was chairman for 12 years. And that was during the time when we listed the business, and we're of a cohort where that company still trades above its listing price as well. So I've walked the walk as well as talking the talk on that. And I would have to say, whilst it was quite a learning curve for me, because the market regulations are so different, on a question of sort of risk reward, it's definitely worth it.
Yeah. Looking at gambling.com, it seems a great company. Adjusted EBITDA margins, late 30%, FCF margins, hovering between late 20s to 30%. It is, however, lowly valued. Is that because of the name? Is it because of the venue? Is it because it's tied to gambling, whereas in fact it's a data service to gambling? How do you think, now that you're not involved at the board, what the company should do in terms of unlocking shareholder value there?
I'm still a shareholder and a happy shareholder, so I have to agree with you on the valuation, of course. It's a good question because I think gambling.com tells the market and tells investors what it does. And what it actually does is performance marketing. It basically has great expertise in organic search engine optimization. That's getting high rankings on the search engines and converting that into customers for our clients who would be the big gaming operators. So it's performance marketing. It's a business, though, that I think has possibly struggled on valuation for other reasons than just the name. I think the fact that the free float isn't large enough, that's been an issue as well. And we actually got the listing away just really at the start of the tech sell-off. So the valuation of a lot of the cohort that listed with us, they're well below water on their listing price. So we're probably in the 10% of that cohort. But I agree with regard to the wider market and other industry verticals, I think the upside is far greater than the downside because, as you say, the company performs, it's got strong growth, it's got access to capital, it could use its stock as a currency if the deal was accretive enough. So I'm still a fan of the company And I think they're well placed now to keep that growth going.
Talking to Jeremy earlier, Mark, you said don't put all of your eggs in one basket. It appears you have sort of many eggs and many baskets. As we think about your UK portfolio, in there you've got B90, springs to mind. Ronnie seems to be doing a very good transition in there. You've also got Gaming Realms in there as well. Again, a nice transition. Focusing a lot, I think, at the moment around go-to-market deals with FanDuel and Playtech. But my question is different, actually. It's, as a sell-side guy in capital markets, we look at the role of the chairman as the individual who is able to sack the CEO, should conditions warrant it. You are a poacher turned gamekeeper, and that's a gamekeeper of shareholder value. You have loads of operational experience. How do you support these companies? Where do you get involved, Mark?
As I say, I'm off the board of gambling.com now, but in that role I was chair. I would have only taken that position on if I had complete confidence in the management team, which I did have and continue to do. I'd worked with them for several years before formally joining the board and becoming chair. I think it depends on a case-by-case basis. I do understand marketing. It was such a natural fit for us as an investment within the portfolio. And it's the classic non-exec role of being able to test management, to ask the right questions, to make sure they've thought everything through. And I also regard it as a process where, in effect, I'm trying to hand the grey hair down. I got the grey hair for a reason. And if I can make their life easier by the transfer of knowledge, and that speaks to one of our investment criteria, probably going to let a cat out of the bag here. But when we talk to early stage companies, one of our big tests is whether management have the ability to listen. I mean, really listen, as opposed to lip service. And where they do, I think that does open the door for this knowledge transfer. In terms of the other investments, there are, I think, 3 UK public company investments where I'm involved to one degree or another. And it's always around working with management, helping them think through strategy, think through on execution, and passing on the benefit of experience, while at the same time making sure that they've covered off all options.
To that point, Mark, of the 3 UK listed names, could you just give us a sort of high level encapsulation of what attracted you to those businesses and what type of knowledge transfer, information transfer, skill transfer that you've been able to exercise and witness in the development of those businesses?
So what attracted me, in the case of B90, I literally got a call out of the blue from one of their directors, Ronnie Breivik. The company was going to hold an EGM. He ended up becoming executive chairman. And the reason why Ronnie called me is I'd been his boss at Sporting Bet. He'd been our Nordics territory manager. We knew each other, which was a help. I have complete confidence in him and his ability. And the company, under the previous management, had struggled greatly. That's why there was an EGM. There were unhappy shareholders. I worked with Ronnie to shape a new strategy for the business. Quite frankly, I didn't need to do much to help him implement it. And as the market will have seen following the latest update, the company definitely actually for the first time in their history, they've now had H1 6 months of consecutive profitability. So that one seems to be going quite well. It's still a turnaround. It's still tiny. It was virtually a shell when I got involved. But in a way, that was part of the challenge. The mental challenge of, well, we've done this before. Could we do it again in a slightly different situation? Early days, but so far so good. Gaming Realms, chairman is Michael Buckley, famous, of course, as a racehorse owner and the owner of Constitution Hill. I knew Michael going back to his days at Cascade and through the horse racing connection. And he'd asked me a couple of times to join the board, probably telling a little bit of a tale or two out of school here. I'd said, well, you're trying to do too many things. You're in an affiliate business, a real money gaming business, a games development business. You're a tiddler on the market. It's confusing to investors. They don't know how to value it. all the while you seem to be falling between two stools and you're not generating cash. I think really I was just the second opinion. I was pushing against an open door. He knew, he made changes. I've joined the board. And look, investors can see the track record of that business. It's fairly high growth. It's international, doesn't have too many eggs in one basket, increase the rate of games. And it's a highly, highly scalable business model because you have all those integrations into the big operators and you can pump more and more content down those integrations. So that's one I'm also very happy with. Good Life Plus, which is much newer into the portfolio, a very bright, young, enthusiastic entrepreneur, Charlie Chad. Charlie hunted me down through the internet, discovered we had a mutual contact. I had the pitch from Charlie, and we now have a disclosable shareholding in that business. And that operates in the prize draw space, which is interesting in itself, in that it's currently not regulated. It may become regulated at some point, but I don't think that would affect the business model of Good Life Plus. But it's also a business model that seems to be working increasingly internationally as well. So I think there's some big prospects there.
I'm interested in your comment, Mark. You said that investors need clarity, which was one of your guidance points to the guys at Gaming Realms. And I sort of put that to one side as I started to listen to you chat about Good Life Plus, which seems amazing. We have long been interested in the whole notion of super app, a bit like WeChat in China, sort of the one app that does everything, and the sort of mission at Good Life to excite, entertain and enrich UK households, offer blockbuster movies, online fitness, that kind of idea. And it seems to be this great sort of funster business model, and compare and contrast with moneysupermarket.com, which has very much a sort of a nanny knows best view of the consumer. So we will tell you what to do and where to go with your insurance and your travel and your car rentals. However, consumer services is a very evolving space. And you would think that even here, investors need clarity because it's changing so quickly. Do you have a long-term vision where a company like Good Life Plus will end up?
Look, I think it's a company that has a huge opportunity because the world is only just beginning to understand that so-called super app opportunity. It's not hard gambling at all. It's prize draws, but it's prize draws amongst a free breakfast from Greg's, a free Netflix film, half-price gym membership, and so on and so forth. So it is that fun whole lifestyle approach. I think that's the equivalent in terms of super app becoming the app aggregator to a degree, because at the end of the day, it's all about, people talk about share of wallet. This is share of the eyeball time, and Good Life do perform well on that. So it's a business model I like. I think it's got further development potential. And as I alluded to as well, as and when the company's a little bit larger, I think they should probably test an international market or two.
But do you also think that this model could evolve a bit like a Trustpilot or a Bob's Guide kind of a thing, possibly even a little bit more like the gambling.com model, whereas this becomes part of an acquisition channel for the industry, or does it move the other way in terms of working with consumers? How do you see this industry? Does it go sort of, increasingly B2C, or does it go B2B? We love B2B because there just seems to be greater, for want of a better word, forecastability into it, where we understand the KPIs so much better.
Well, just on KPIs, another of my metrics, particularly for B2C, is what we call marketing return on investment. That's the cost per acquisition as a ratio with the customer projected lifetime value. Good Life Plus scores well on that. But I think the question of B2B and B2C, your question is very relevant because the company is having that debate at the moment, and it's in connection with international. The company have basically got an opportunity of having an international partner who does everything on the ground in terms of the offering, the local payment channels, and Good Life Plus control the know-how and the technology platform. So that's certainly one opportunity. It's already public domain. The company have worked as an acquisition channel with, funnily enough, gambling.com group. So they have run a joint promotion together where I think the terminology used was that Good Life became the official giveaway partner of gambling.com. And that campaign is currently live. It's very new, so I don't think I should say too much about it. I'm not actually privy to the detail of the numbers. But I think to answer your question, that shows you the mindset of the company and where the company are thinking. And another public domain deal, Good Life have worked with Vodafone, and it was a huge campaign. Vodafone, some 21 million customers. And I think the mindset from Vodafone was adding something like the Good Life Plus offering will increase the stickiness of the customers. They're getting more than just a mobile phone. They've got access to a great deal on special content as well. So reducing churn is something that the big telcos are obviously focused on.
Mark, where does Valhalla take you?
Valhalla now is owned by my two daughters. That's part of the succession planning. And within that family office structure, my youngest daughter, Sophie, works with me full time. She's worked with me for a couple of years. And she has a background as a city analyst. And also she's worked for a small private equity company, Bestport Capital, where she saw deals through from end to end, through origination, right through to exit, observation, negotiation, and everything else. And what we are really focused on is not startups per se, but early stage venture capital type investments with highly scalable business models. That often means scalable software platforms. And that is a theme that you will see in a number of our investments. So we like a business to have reached at least 1 million ARR. We see ourselves as growth capital. Quite a few investors, VCs, like to say that they add value to founders. I'd like to think our track record stands up on where we've done that previously. And so we do get involved in working with the companies. And that's something that I particularly enjoy. There are 4 people altogether in the family office. So I have got time to spend with the companies as opposed to just the day-to-day job of managing the portfolio.
What are your thoughts about the development of the portfolio? And I don't know if you can talk about any particular instances or areas, particular companies that you're particularly keen on or interested in terms of the prospect for becoming publicly listed companies, perhaps?
In terms of where companies want to go public, that is not something that we set as a target in the very early days. It can happen, and it will happen in the right circumstances. And maybe we have got 1 or 2 that will go public in due course. But we've got a situation as well where often a trade sale makes more sense. Sometimes founders going onto the public markets, they get locked up, they can't trade their stock. They might be the last people sat around the table with a mortgage. So sometimes a trade sale is a better alternative, particularly with, the small micro cap market in London under such pressure at the moment. We've got a company called Vitesse PSP. It's a payments business. A couple of years ago, it won a framework agreement with Lloyd's of London to do global payments and treasury management for the insurance industry. That in turn saw, I think, all but one of the corporate members become clients. And they've been able to provide the insurance industry with huge efficiencies. Lloyd's were one of those industries that perhaps the insurance industry in general was, I think it's changing now, one of those industries that was very slow to adapt to a digital world. And
yes,
hugely inefficient in terms of their cash management. Whereas the team behind Vitesse, who've done it before and who I backed before, they do real-time cash movements globally. That's their core USP. They do it very well. That's integrated with treasury management. Now, that company has recently attracted a $93 million investment from the giant US PE fund, KKR. So that's all public domain. That is not only capital. KKR are now looking also to take Vitesse into the American market, helping with introductions. And that's a company, I think, one day that will have a genuine opportunity to either consider a listing, which if that American market launch is as successful as we think it can be, then that's a business that could list on NASDAQ. It's also a possibility that one of the major international banks would want to buy it one day.
And of course, the payments industry is eminently scalable, and we've seen various iterations of that in recent years.
Mark, way too much to unpack in what you're saying. It's 1997. You've just come home. Your wife meets you at the front door. You said, here, look, I've just sold that bricks and mortar business and we're getting into clicks. She looks at you in askance. Today, AI is the new internet. My question is not what do you say to your younger self, but what do you say to Sophie now in terms of success factors to drive into a new wave of technology?
I'd say nearly half of our tech investments are using some form of machine learning or AI already to increase efficiency within the business. I think those efficiencies are also for the B2C. I think we're going to see more happening in the search, the marketing end of B2C as well. So I'd say to her, keep at it, keep learning, keep on top of it, invest time in understanding it, and invest time in understanding what's being missold as AI, because it's a bit like the days of the internet. I can remember back sort of in 97, 98, 99, you only had to announce to the market that you'd got an internet strategy and your share price would leap 10%. Not all of those companies making those announcements actually walked the walk. And I think that's where Sophie needs to be on AI. We need to understand the difference and we need to get behind the right companies that can take advantage of it.
That really chimes with something I heard the other day that struck a chord with me. Was someone said, AI isn't going to take your job, but somebody will take your job who understands AI. And I think that's where we're at.
I'd subscribe to that saying.
Mark and George, thank you both very much for sharing your time with us today. Learned a lot. Good luck with everything. You've put a couple of names on my watch list today that I'm going to be following with closer interest. And hopefully we can have a follow-up conversation in the not too distant future.
Thanks, Jeremy. And I must say, I found it interesting. I've been asked some challenging questions. I've been asked some questions from perhaps some days gone by, which was a bit of a memory test as well.
Thanks a lot.
Thank you. Thank you very much.
Thanks both.
Brought to you by Progressive Equity.